November 20th recap. We enter right here with some downward energy. Look at this daily chart for NQ. So here's the daily chart. Minus this big, forget about what happened today, right? So just look at this. So the reason I'm asking you to do that is because you can see clear trends with your eyes. You don't need a lot of technical indicators sometimes. And you don't have to take it seriously either. So just broadly, we have a broad downward bias. If we see the setup for a large downward move, we're going to think to ourselves, okay, this resonates with the current trend. This is a daily chart. Just keep that in mind, right? Same, look at this upward trend here forming. So anyway, just don't make it too complicated. Think about it like that. And today we did have a big sell-off, but it doesn't matter. Before the market opens, go over any breaking news, any catalysts, any important meetings or announcements in the news. And then just look at the daily chart and just look. Just feel with your eyes. The market opens here. And our first setup, our strategy triggers right here at 9:58. We had a crossover to the upside with the 5-minute. And then we had some upward momentum with the 15-minute, and then the 30-minute we had upward momentum. See how everything is going? Everything's got upward momentum here. And we target a 1-to-1 ratio, so we would have entered right here at the close of this candle, that level right there, this price level. And then our stop loss is slightly below that candle, and then we target a 1-to-1, or sometimes less. Sometimes we target 2-to-1 if things are more risky. But this is a 1-to-1, which turned out to be a win. And then we had a loss right here. Look what happens here. 5-minute crossover. Still got upward momentum on the higher time frames. And this one would have been a loss. We're on the right side of the 2-minute histogram. We have a power volume bar, which is just a volume bar which is greater than the previous 3. We would have entered here. Then we would have gotten stopped out around here, right here. This is where the 15-minute and the 30 started to change direction, because this is where the major sell-off started to occur. So 1 win, 1 loss so far. And I actually did not take this trade. I should have, but I did not. And also, say I took both of these trades. This trade would have been a win right here. So we'll say that's, $50 just for example. This loss would have been more than that because this candle is larger, right? So we're negative on the day. Technically, the strategy is negative on the day. That's a way to think about it. So before this sell-off happens, we don't know this is about to happen, right? But there's a higher risk, so you don't want to bet as much. But pay attention to what's happening right here. We're on the right side of the 2-minute V. We get a power volume bar to the downside right here. Look at this candle. See this? See this volume bar? Larger than the previous 3. We're on the right side of the 2-minute. Look at this. The 5-minute has crossed over. We've gotten a confirmation with the 5-minute. And the higher time frames are not caught up yet. So in real time, this doesn't look that pretty. It kind of still just looks like this. So we really don't have a higher time frame confirmation yet in the 15 and the 30. It's just the 5-minute telling us with the building of the volume on the 5-minute. So we get this right here, and this ended up being the trade of the day. Like, I didn't take it, but I mean, think about, this is how you make, that's how you replace your job. That's how you do a lot of wonderful things in life, is you see certain setups, you recognize they're a little bit higher risk. They're not as beautiful because we don't have the time frame of the higher 15 and 30 supporting the trade, right? It's just the 5. But man, sometimes it's worth it, right? So the next time that the strategy came into effect was right here. This is the third time that the strategy came into effect today. We are selling off on the higher time frames. We're aligned right here in the 5-minute. We have alignment. What are we looking for then? We're looking for a power volume bar on the 2-minute chart with an alignment on the right side of the MACD histogram. These bars go in the right direction. Power volume bar, enter right here. This is our entry. This is our stop loss right here. And our take profit is normally a 1-to-1 if everything is aligned. It hits and continued going down. I mean, this is a lot of extra money you can make here. That's the third occurrence of the strategy today. For the fourth occurrence of the strategy of the day, we need the 5-minute to turn back around, and it starts to turn back around right here. So the closer it gets to the midpoint, the more our confidence goes up, okay? Even if it starts going down up here, that's great, that's awesome, but it's higher risk. The closer it gets to this, the higher our confidence gets, and ideally we want it to cross over to the correct side because we're going down, we want selling here. That's what we want. So right here it almost happens. So with that being said, the fourth occurrence happened around 3:52. We're on the right side of the V, even though we're overextended. And then we've got a power volume bar right here. So our entry would have been right here at this low, the close of this candle. Our stop loss would have been around here. We would have targeted either a 2-to-1 or a 1-to-1. Why would we target a 2-to-1 instead of a 1-to-1? Why do I keep saying that? The 1-to-1 did hit because it would have hit right here. But notice the 5-minute MACD. So we haven't crossed over yet. The closer we get to the 0 point midline, the better, and the higher our confidence gets in the trade. But we're not there yet. We prefer it to be crossed over. So taking a trade like this is technically not proper. It's a weaker setup. You should scale down. You should protect quicker. This one ended up being a win. And you can always feel free in this situation to take profits quicker. Instead of a full 1-to-1, you could do a targeted 2-to-1, for example. So the next time the setup occurs, we need the 5-minute to be aligned with the higher time frames. Higher time frames are going down, down. We need this to be going down as well. So look right here. See this motion in the MACD histogram? It doesn't go down until around right here. Do we get a power volume bar on the right side? Do we see one? And we do right here. Look at this. This one right here, this very next one. Though we haven't crossed over yet, this is improper. The 15-minute is dying out, but the 30-minute is still strong, which is the most important. So we're on the right side. We get a power volume bar. We target a 1-to-1. Yes, this would have hit as well. We would have gotten much more than a 1-to-1. But regardless, still a higher risk trade. This is why it's not proper. It's not the official strategy. This is kind of just a more discretionary setup here. So technically, the strategy only came into effect 3 times today. But also technically, when you consider knowing what the 5-minute MACD histogram means in terms of momentum, then technically it came into effect 5 times today with 4 wins and 1 loss. I hope you have a good rest of the day. Take care, and I'll see you in the next one.